Falling home prices, falling sales activity. We've got a major financial institution in Canada who has changed their forecast for the housing market right across the country. All things that I want to dive into today. So please stick with me after this intro for your June 2022 GTA real estate market recap. Hey everybody, it's Rob Marsiglio back here with the Robert Marsiglio Realty Group, and I know we have a lot to get into today, as I said off the top. But please, before we get into the video, like, subscribe, and turn on those notifications. So this is just put on July 6th. Higher borrowing costs continue to impact home sales in June 2022. Sales totaled 6,474 across the board, and that was down 41% compared to last year's strong results. The number of transactions was also down compared to May 2022. This is often the case due to seasonal nature of the market. So what I think we're seeing here is that the market has responded to rate increases a lot quicker than was anticipated. The month-over-month dip is not concerning, as was stated in this article. We do see that every single year. Seasonal real estate market, that's just what happens. Hot spring market followed by a quieter summer market because people are enjoying the limited warm weather we do get in this part of the world. And then things pick back up in the fall usually. We did see a big drop from last year. Again, I wouldn't say that's too alarming because last year was record-setting pace of sales. This year, things did slow down. It's actually a 20-year low for June though. So our average selling price at just over 1.1 million remained 5.3% above June of 2021, but continued to trend lower. We'll get into all that stuff in just a little bit. Our home price index composite benchmark was up 17.9% year over year, but it did experience a dip from May as well. This tells us that annual growth was driven more by less expensive market segments, so your townhomes, your condo apartments, things of that nature. So what is happening with those rates that we saw? Well, let's get a little recap and let's try to project where things are going based on what we're seeing in the bond market as well as headlines and economist projections. So here we go. It's our Rate Hub check-in. Every single month we'll do this. You can see starting off here, we have our 5-year variable rate mortgages, so prime minus whatever the discount is, and we have our 5-year fixed. 5-year fixed have all been above 5% for a little bit now. Bank of Montreal, TD, CIBC, RBC, and Scotiabank. Those are the big ones right down the board. Where do we see these rates headed in the near term? So taking a look at the Government of Canada's benchmark 5-year bond yield, we can see that we've been kind of on a steady decline in this bond yield since, right around the middle, beginning of June. Got up to over 3.5. It was 3.56 at the peak, and now we are back down to just under 3. Now, I don't think that what we're seeing here can be called a trend just yet. I want to see what happens with these next couple Bank of Canada announcements to see how the bond market feels about, how well is the central bank doing when it comes to combating inflation. If they think that they're overcorrecting, these bond yields will continue to dip. If they think that they're not doing enough, bond yields will continue to rise again, and then the 5-year fixed product will follow. We can be a little more sure about what's happening when it comes to the variable rate mortgages. Those are directly tied to the Bank of Canada's overnight rate. And here's an article that was put out by Reuters very recently. It was a poll of 29 economists. They're saying that the bank is set to raise that overnight rate by 75 basis points this month. That's going to be July 13th. Watch out for that announcement. Then by another 50 basis points in September, with the goal being to get up to 3.25. You can see down here in this bottom paragraph by year end. So that would leave another 50 basis points worth of hikes between our September meeting and the end of the year. So some people are saying it's going to be 75 in July, 50 in September, and then 2 more hikes of 25 in October and December. Some are projecting we might just get it all done within October, get right up to that 3.25% number by year end. That being said, we know the variable rates will respond automatically to those overnight increases. So you can expect to see these jump up by 75 basis points in just 1 week's time. Now, how about homes in the market itself? So I'd said off the top that we did have one big bank revise their forecast for the housing market going forward. So let's take a look at what they had to say. So this forecast came from TD, and they're expecting a drop of 19% in house prices across Canada by 2023. So again, I've highlighted a couple key sections here. The TD Bank has officially downgraded their forecast for the housing market compared to their take in March due to monetary policy tightening at a faster pace than expected. TD expects that the overnight lending rate will rise an additional 1.75% before the central bank finishes its hiking cycle, hitting a termination point of 3.25% by the last quarter of this year. Now, how's that going to play on sales and sale price? They're forecasting a 33% peak to trough decline in Canadian home sales from Q1 2022 to Q1 2023 before buying activity starts to stabilize. In all, we're expecting a 23% drop in sales this year and 12% drop in sales next year. That's all going to result in a 19% drop in the average home price across the board from peak to trough, they're saying. So at some point from the peak, which was more than likely February, March in some cases, to the trough when these things do bottom out, it will be about 19%. Remember, this is right across Canada. They are projecting things to be a little steeper of a drop in Ontario and BC, the two markets that saw the biggest quote-unquote rip during the pandemic, the biggest increase in prices. So let's take a look at what they actually projected specifically for Ontario. So again, when it comes to home sales, we were up 18.6% in 2021 versus 2022. They're projecting that by the end of this year, we'll be down about 32% in home sales in Ontario and 13.3% in 2023 versus 2022. Now for the average home prices. So again, in Ontario, up about 25% in 2021 versus 2020. They feel that by the end of this year, when you average out the entire year, the yearly average sale price will be up 3.8% and will be down 9.4% in 2023 versus 2022. So again, just to clarify, it's like a snapshot point in time where it will be the worst at that 19%. They feel like it'll be worse in Ontario. We'll see that those numbers already have exceeded 19% in some markets in just a few minutes here. But if you average the entire year out, that is where they're coming up with these 3.8% up this year and then 9.4% down next year. That's enough of the forecasting and the mortgage rates. Let's see actually what happened in June 2022 across the GTA. Starting off with everybody's favorite, the median sales price. And you can see here trends are downwards. I think the big surprise is that Toronto freehold properties had the kind of biggest drop off percentage-wise from May to June. That kind of bucked this trend where, they didn't see quite the gains that we saw in, Durham and Peel early. It was kind of a more not stabilized growth. It was definitely still excessive, but we did see that the fall happened a little slower in that freehold market, but it seems to have really accelerated in the past couple of months. So what has happened now from the peak of the market? So Toronto freehold down 16.9% from the peak in June. Condos down 6.8%, Durham down 25%, York down 16.1%, and Peel region has joined Durham with a median sale price of less than $1 million now, and they're down 20.3% from the peak to June 2022. We've been monitoring this one now, and again, you see that big drop in the Toronto freehold price has brought their year-over-year, median sale price change to just 1.82%. So everybody is creeping back into, the numbers we were seeing in 2021. We're projecting that probably sometime July, August, sometime this summer. Across the board, I think we'll see those year-over-year gains wiped out. But Toronto is kind of sneaking up on that number a little quicker than maybe some thought it would, just again, based on the fact that their rise in price wasn't as fast as elsewhere. So I expected the drop-off to maybe be a little bit slower as well. Again, our sold price to list price number, we can see what we were illustrating last month, if you remember, was that everything was trending downwards back towards 1, meaning that a list price is truly reflective of what that property will sell for, kind of in an ideal world. Everybody's creeping back closer, and we actually had York is right at around 1. Peel region, this black line here right on the edge, that actually dropped below 1 to 0.998. So again, trends we're expecting to see continue going forward, especially as things quiet down over the next couple months. Sales totals now are trending kind of how we figure they will going into a summer market. Less sales across the board in June than in May. So year to date in sales, you can see we're down anywhere from 24.3% in the Toronto condo market to 37.2% in York region. What about new listings? Again, we saw maybe a bit of a fake resurgence in new listings, trying to get the market going in Toronto here, the condo markets and the freehold markets both having a bit of a bump. Everybody else has kind of been trending downwards since February. Year to date, Durham virtually the same amount of listings as they saw last year, whereas you're down kind of 10% in the York region and Toronto freehold markets. This disparity between our new listings year to date, and our total sales year to date is kind of the reason that we're seeing prices decreasing so much. The demand is just not there for the product that is being put out. And again, that's a bit of an oversimplification. It's not just a simple supply and demand equation at this point. It is a lot to do with those rates that are going up, cutting into affordability. I think the interesting news is that the correction that has happened in some markets is actually more than the impact that affordability has had. So it could just be a lot of buyer sentiment at this point that is bringing the market down. I'm not saying that it won't continue to come down because of the economic kind of factors surrounding and affecting the market too. But for now, it seems that a lot of this big correction has been buyers waiting to see what is going on in the market as well. As for our days on market, so we see last year, again, the trend from May to June was that things sat on the market for a little longer as we entered the summer, as we expect to see. We're seeing the same thing this year in 2022. Quick update on our months of inventory. So May versus June 2022, we were up anywhere from 18.3, 18.4% to about 33% in peel for our months of inventory. So is this just because we have more active listings on the market, or what is the reason? Well, let's take a look. Our active listings are actually down in 3 of the market segments that we look at and up in the other 2, which means that it's not the active listings piece that is driving months of inventory up. It is that suppressed sales that we've been seeing. Again, probably not coming as much of a surprise considering that across the board, like we said, we are down about 40% in sales. Now, when I do my months of inventory calculation, I'll take a snapshot of how much inventory there is in a given market segment. And I'll look at how many sales happened in the prior 30 days. And I'll divide that active inventory by the number of sales to kind of give us an idea of how long it would take to sell out. You can see here that months of inventory is being driven up just by that kind of suppressed, whether it be temporary, whether it be long-term demand. Buyers just are not out there putting offers on properties, getting sales done. Now, to wrap up the numbers, we're just going to look at our showings and our offers per new listing as we always do, see what the trends are telling us. So Toronto, little uptick in showings. Durham leveled out. York, a bit of an uptick. Peel continued a little bit of a slowdown. Not sure if we can see a trend here. We definitely know things have slowed down in the periphery since January, that is for sure. Whether or not we've kind of stabilized or hit a bottom in terms of interest, and it will pick back up soon, to be determined. Offers, on the other hand, have continued to decrease across the board. Since February, we have not seen a month where we had more offers per new listing than the prior month. So that there wraps up another month in GTA real estate in the recap. What did you think and what are you seeing out there? Do you have any questions about your market specifically? I'd love those to be put down in the comments. I'll answer any questions I can, and we'll definitely refer you to the right person if I don't know the answer. If you're getting value out of these videos and you want to see these more and again each month, please like the video, subscribe to the channel, and turn on those notifications so you don't miss anything. As well, please share with friends who you think would get good value out of these videos. We will do this all again next month to recap what happened in the month of July. Again, stay tuned to those rate announcements coming up. Stay tuned to the channel for some more updates between now and then. But until we speak again, stay safe and cheers.